Okay, guys, how you doing? Going to go over our Forex trades for today, Friday, October 9th. Just one trade, pulled out 2.9 pips on a size-adjusted basis. On a non-size-adjusted basis, 14.7, and we pieced it out on its way up. That's the average price you see there. Anyway, we'll go over that in a minute. First, just want to talk about some economic news and Fed speak and ECB speak. So first, the Draghi from the ECB, he says the euro area is showing signs of resilience, ready to use all instruments available. They can adjust QE size, duration, and consumption, and we know that just from the other 2 days ago. We know that the ECB made comments about adjusting QE. What else we got here? As far as here in the States, we had U.S. Import prices. They came in with a negative 0.1%. Not very good at all there. What else we got? We had some Federal Reserve governors speaking. Lockhart, he was speaking this morning. What did he say here? He sees Fed lift off at either October or December FOMC meetings. Progress points to lift off relatively soon, he says. September jobs added enough to absorb labor force growth. Situation calls for especially diligent monitoring, he says. Domestic U.S. economy expanding at moderate pace. I don't know about that, but that's what he claims. Inflation data to show upward trend in due course. So what is he saying? Inflation is not showing an upward trend, I guess, right? $4 trillion later of QE, but whatever. Let's continue. No change in outlook, but sees a bit more downside risk. Liftoff this year likely is likely appropriate, he says. Data is giving varied signals, more ambiguity lately. Consumer data to be most telling for October-December meetings. That's interesting. So consumer data. So it sounds like, at least in his mind, consumer data is going to be going to pull a little bit more weight than non-farm payroll and unemployment numbers, even though they were so horrible just a week ago. By the way, since the non-farm payroll numbers came out last Friday, here it is a week later. At that time, as soon as they came out, 8:30, the stock market's open an hour later. Markets gapped down. Finished the day up, I think 200 some odd points that day. Since the bottom on Friday to about an hour or so, just around 11 a.m. this morning, or even actually, well, maybe it was actually last night's reading, the market was up 1,000 points on the Dow, and yet non-farm payrolls, the payroll numbers were horrible. Unemployment number, you could throw that out the window, right? Non-farm payroll numbers, absolutely horrible. If that data came out pre-financial crisis, that terrible, the market would be down 1,000 or even more. The market would be down 1,000 or more points. But we now live in opposite world. Bad news is good news for risk assets. But we've been saying that for the longest time. Lockhart sees 2 to 3% GDP growth. He says it's plausible. 2% growth is the new norm. And that's, again, after $4 trillion in QE. And I can't stand when I hear Federal Reserve governors, Federal Reserve chairman, any central banker, and any of these huge mutual fund managers, hedge fund managers like Bill Gross, a mutual fund manager, when they use the term new normal, I can't stand that. Why does it have to be a new normal? Why can't we just go back to what was normal? By saying new normal, and we all know the numbers are lower than what they used to be as far as growth and jobs and this and that, with the new numbers being so low compared to what used to be in the 80s and 90s and 2000s up until the financial crisis, by saying new normal, they're admitting, oh, they're just giving up. They're giving up. They're throwing their hands up in the air like, screw it. This is it. The new normal. We could all live with it. That irks me to no end, I got to tell you. Anyway, I'm going off on a tangent there. Goldman Sachs, for what, the fourth time in 2 weeks, cut the third quarter GDP to 1.5%. From they were 1.7% after the non-farm payrolls last Friday, and they didn't do any cutting to GDP this week. I don't believe. They're now at 1.5%, and they're citing inventories, as inventories have been rising in these different companies, and their sales are not rising. So that means they're not selling the inventory, right? So they know that's a good indication of what the GDP is going to be. So here it is, the fourth time in 2 weeks. They keep going at this pace. By the end of the year, they'll be showing zero growth for GDP, or negative. They keep going at this pace. Seems like every week they're knocking anywhere between 0.2% and 0.4% off of GDP growth. We'll be down to 0% in no time. Let's see. Who else? There was someone else spoke today, I thought. I don't know. Maybe that's it. What do we got here? Oh, Bank of America came out with something, and they said this rally. This is the other thing that triggered it in my mind this morning. When I mentioned that this Dow is up 1,000 points from when the terrible non-farm payroll last Friday, Bank of America came out and said this morning, they said this is not a risk-on rally, meaning people buying the stock market, buying risky assets to fuel the market higher. They're saying it's an enormous short squeeze. They said it's the biggest short squeeze they've seen in years. That, my friend, is a little on the scary side. William Dudley spoke. That's who. I knew there was someone else spoke. William Dudley from the Fed spoke. He said he wanted to see more information at the time of the September meeting. That's why he voted to not raise rates. U.S. economy going to get some inventory drag in the second half. And that's just what we were saying before about inventory. So he's at least acknowledging it and saying it. He's seeing evidence of slowing, inflation below objectives. So he sees evidence the economy slowing, inflation below their stated goal. And he says they're hoping we're going to get inflation back to 2%. So for the Fed's William Dudley, mainstream media, as far as the talking heads on CNBC and Bloomberg and whatnot and Fox, they may not really align with him much, because out of all the Fed governors, William Dudley, he kind of says the things that you and I are thinking about the economy. He's not. I mean, he's not going to be exactly what you're thinking, but he's more in line with the average person in his words that he says. If the average person's thinking about the economy and what they're living through, whereas a lot of the other Fed governors don't go down that path. They try to be, they're trying to manipulate things a little bit better, make things seem more rosy than they are. Where Dudley is just more of in my opinion, he's more of a realist than the other Fed governors. And so then the talking heads on TV, they're trying to paint a rosy picture as well, to align themselves with the other guys. So you may not get a good feedback on Dudley, but that's the way we see him, at least. And that's Goldman Sachs. They came out and they repeated their price target for euro US dollar, which is just under parity, 0.95000. They're still keeping with that target. That was their trade for all 2015, and they're keeping with the target. I mean, they only have a few months left of the year, but I don't know if it'll hit there. But they're sticking to their guns. Okay, let's get to the trade. Now I took up enough of your time. Let's get to the trade. We were long New Zealand dollar, Japanese yen, 20% of our normal size. We were trying to get more trades off last night, just wasn't happening. This morning we kind of shied away from a few things. We really weren't getting setups. Anything based with Canadian dollar, which we like to trade the Aussie Canadian, the Euro Canadian, US dollar Canadian. They came out with their unemployment numbers. We're pretty much in line, but it's a big data point, so we had to kind of shy away from those. And then we just weren't getting setups this morning. Plus, we didn't want to be stuck in anything and have to hold it over the weekend. So we did get this trade, though, New Zealand dollar, Japanese yen, long from 79.907, as you can see. And we pieced out a little bit as we were up about 10 to 12 pips. We pieced out some, and then we sold some more upwards of around 80-20 or so, 80-22. Late last night, we actually couldn't. I wasn't falling asleep very good, so I decided to check on it and liquidated it around 80-22, 80-24 area, where we had a profit target or target of 80.30, and I saw it was up there, so we just said that let's just get out, and so our average price is 80.054 for 14.7 pips. We sold some 79.98 or so, and then some right around that 80 number, and then some around 80.15, and then we had some left, and we sold up there around 80.25 or so. So the average price came to 80.05, 14.7 pips, size adjusted 2.9. You can see what happened. I mean, if we would have left it at 30, we would have got out of the last piece at 30, and it actually ran a lot more. It ran all the way up to 80, 81, 80, 82 level. So, but it was a good trade overall. I mean, it's a beautiful trend here on the half-hour chart. You can even look at the hourly chart. It's just a clean one. We're going to be looking to trade this again next week, along with some others. So that's it. We're going to wrap it up. Hope you had a good week. Ours wasn't great, but ours was a profitable week, and it was pretty good. And we'll take it. So if you're still waiting for any signals, I don't know if we'll get any more today. It is 12. We probably won't get any more today, but we'll be back in action Sunday evening and Monday morning. So hope you have a good weekend. If you're still trading now, good luck. And assuming we get some action, we will do a video Monday. Have a great rest of your day. Shh. Shh.